Today's video is about what to expect in the housing market in 2023. We have a special guest, Chris Madrid with Caprock Home Loans, who's going to give us his insight on what's in store with interest rates in 2023. So stay tuned.
All right, welcome back to the Living in Texas Realty, where we discuss and break down all things Dallas real estate.
Yeah, so if you're considering moving to Dallas, Texas, or perhaps you already live here and want more information on a new area, you've come to the right place.
So do us a favor and hit that subscribe button as well as that bell so you're alerted every time we do a video.
Yes, and don't forget to give us a text, call, or email, whatever you got to do to get a hold of us, just get a hold of us.
All right, now let's get into what's going on in 2023, and let's bring in our special guest, Chris Madrid. Welcome to the show, Mr. Chris Madrid.
Thank you so much for having me.
Yes, and for those of you who, may know or may not know, this is Chris Madrid, our preferred lender. And if you've been on a Zoom with us, you've seen this face before. And he's here to answer some very important questions today.
Absolutely.
Yeah, like what to expect in 2023. We are getting this question all the time, right? Everybody's wondering what's going on with interest rates. You know, it's like the big giant roller coaster. Chris, I don't know if if I need to be holding on to my stomach or get a barf bag. I have no idea what is going on. I feel like I'm just on an e-ride ticket. I'm actually showing my age there.
I was going to say, that shows your age.
Showing my age with the whole Disney reference. But at the end of the day, would we start off in 2022, Chris? What were interest rates back in January of 2022?
Yeah, low threes. So probably under, slightly under 3%.
Slightly under 3.
Yeah. Yeah. So it was a rapid increase.
And where were we at the peak of this year?
Mid-October to early parts of November. The peak was, man, I saw some lenders at 8%. We were almost tripled, right?
Yeah.
Which, man, the tough thing was there was, depending on I feel like I follow both sides of the economy scale, right? And there were some economists saying that rates were going to hit 10%.
Ooh.
Right? Which, I mean, it was not that it was anyone's guess. Once you really start to drill down in some things that we'll cover here in a little bit, you kind of see where things were trending. But yeah, I mean, for a minute there, it seemed pretty bleak. Like it seemed like things were going to come to a screeching halt. But thankfully, yes, I think based on your question, we have. I feel like blue skies are ahead for 2023,
Yay!
and into 2024, and we can dive into that. So
great. So let's talk about 2022 a little bit more in the fact that yes, interest rates have, like you said, more than doubled. But the one good thing is that it has calmed the market down a little bit, right? So no longer are we experiencing those crazy 40, 50, 70 plus offers that we had on some houses here in Frisco.
100,000 over.
Yeah, I mean, we lost out on a deal of $400,000 over list price.
Yeah.
That to me is ridiculous. So those days are over, right? For the most part.
Right.
And so that's calmed it down because interest rates have gone up. But what are we going to expect in 2023?
Yeah, they should expect it to, if they wait too long, right? It will get back to that. Probably not so I think when I looked at stats for Collin County, the average was 10% over list, right? So in Collin County specifically, I think we got up to an average of 110%, right? So that means, of course, that some homes were selling right at list, 5% at list, and then some were probably selling for 20, 30% over list, which is kind of like, like you had talked about, you lost one at $400,000 over asking, which is utter craziness, right?
Yeah.
That's just, it's, and I remember it was, I think we were all in shock.
Yeah.
Ended up working out for our client, right? But still, it's just one of those things where it just the thought of like,
that was painful.
I mean, how much money do you have to throw at this thing to even get looked at? So,
and he said it was
thankfully,
a benefit.
yeah.
threw a Bentley over this glass. Still didn't get
Oh
the
my
house.
gosh. Yeah. No, for sure. Oh my goodness. So thankfully enough, I believe we're past that. But also, the flip side of that is, yes, interest rates have crept up. I believe they have peaked. So that, again, like we were talking, they peaked at about 7.5% to 8%, depending on who you were talking to. There was a very important report that we were waiting on in November. So November 10th, the CPI report came out, and that's the Consumer Price Index report. What it did though, and how it really helped the market was it was replacing. So that November 10th report for 2022 was replacing the high numbers from 2020 to 2021. Right, and that's essentially what the slowness in kind of how this all has transpired is because, again, the inflation numbers are replacing year-over-year numbers, right? So thankfully, November 10th was a massive date. If we can show, let me see if I can show the chart here. We can just kind of briefly talk through that. So if we see this, so this was the trend, right? So this is
So what are we looking at right here? What is this chart?
Yeah, so this is the mortgage-backed securities market essentially, and this is one of the coupons that we look at. This is the 5.5% coupon, and you can see it right here. Mortgage-backed securities, 30-year, 5.5% coupon, right? So essentially, this is just this is like a specific, if we're talking about markets perspective, this may be like a specific stock that you're looking at. But these are essentially mortgage bonds.
Now,
so
let me just explain also as we get into this. For the clients out there, the viewers, this has an inverse relationship with interest rates, right? So if we look on the chart and it's high, that means interest rates are low and vice versa.
That's right. Yeah, so just jumping right in, these are when any videos that you'll hear me do, and I'm talking about charts and things that we're looking at. Essentially, this is what I'm looking at. So this is a 6-month look. So this is now, right? So we're still in December, and this is looking back to July. Now, July mortgage rates were in the 5% range, right? So we had already gone above the 3s that we were in January, February. This was essentially summertime. So this was July, August. From these levels here, right, where rates were in the 5% range, we just, we started to see kind of a sudden decline. We got a little bit of relief in August, and then really from August, I mean, it has been just a massive deterioration in bonds, which again directly translates to this level right here, this lowest level of where of where this was being traded at. That's essentially when rates were in that 7.5% to 8% range. And this part, right, when we were in early October to even early middle of November, very little activity. I think this is, for me, I was like, holding my breath, and are we, is anyone gonna be purchasing a home, right? Those are thoughts that's we start to think about. But yeah, thankfully enough. Yeah. Oh gosh. I mean, find another.
Gonna go sell cars.
Something. Yeah, something for sure. The November 10th date was right here. We can see that massive candlestick moving up. CPI report came out, replaced numbers from last year. Inflation has peaked. Essentially, is the news that we're getting from that, and we are now started moving on an upward trend. So, yeah, from left to right, rates were lower here, started to go up as this trend line goes down. The rate, mortgage rates were at their peak in this area, and now we're thankfully seeing them go up. And here's something if you can look at. So this is kind of what we look at on a daily basis. Yeah. Right now bonds are sitting at about 101.52, which is again from the levels that they were at here in the 98, 97 range is where they dropped down to. We're up significantly, and as long as this trend continues, then hopefully mortgage rates will continue to trend down. So as of today, we're probably sitting in the low 6 range. Okay. Which is great news, right? I mean, we're down 7.5 from 7.5 range down to low 6s. So that's a 1.5%. Affordability is the key component. Yep. Right? Because your mortgage payment is a lot cheaper at 6% than it is at 7.5. that's the outlook. I feel like the first and second quarter of next year, as long as things maintain, of course, we're going to get a new CPI report every month, right? So it's going to be, January, February, March will be a good indicator of how things are going to continue to move. I feel like interest rates are going to go down over the next, year to 2 years. It's going to be at a slower tick, right? We're not going to go from 6% down to 4% next month. The first quarter of 2023, we may end up in the high fives, right?
Ooh.
By summer, we may be in the in the mid fives, and then at some point over the next again 12 to 16 months, I feel like we'll be somewhere in the low fives, and that will be our new kind of our new bottom, right? I think the days of 2% and 3% are gone. One, because the Fed isn't pumping billions of dollars into bonds, right? So the reason that rates were where they were at, which is that those are all-time historical lows, and it's ultimately because the Fed was artificially keeping rates low by pumping billions of dollars into bonds, essentially.
All right. Well, it sounds like good news, right? So
Yes.
interest rates probably for the year are going to start off in the just above 6%, maybe slide down a little bit into that upper side of the fives in the spring, and then through the summer, and as we approach the fall of next year, you're looking settling somewhere in the low fives.
Yeah, mid to low fives. Obviously the thing that we really need to, and again, these are the conversations that I'm having with buyers as well, is when interest rates are high, there's very little competition, right?
Right.
You're able to get a home at list price. You're able to get the seller to provide concessions for closing costs, pay a title policy, pay survey.
Mhm.
We've had clients, obviously close with a 2-1 buy down where the seller is paying a temporary buy down for a lower rate over the course of the next 2 years. So there's different things that are available right now that won't be when interest rates come back into the 5% category. I feel like there's a lot of buyers right now that are just not buying at 7%.
Yeah.
Right. And what we have to remember about the media is there's always a lag, right? The information that you see on your nightly or weekly news is always delayed, right? So I feel like no one at this particular, not no one, but a majority of people don't know that rates are now in the 6% range.
Yeah, they're still panicking over 7.5.
You're right.
Right. No, Patrice and I were discussing this. We are ecstatic and absolutely excited and with anticipation of what 2023 is going to bring. This is what kind of separates the experienced agents and lenders and teams and not so experienced agents and teams. The last couple of years, we just, like I said, we've been throwing stuff at the wall, throwing offers in there, trying to do the best we can with running comps and that sort of thing. We never got in a situation where we even overspent with our clients. So all of our clients are in good shape, but it's been tough as far as that's concerned. Now we're back to a more even playing field, right? Where we can actually, this is where our expertise and our experience comes in, and we're able to crush it.
Yeah, I feel like it may be short-lived. The reason I said it was short-lived, right, or it may be short-lived, is the big reason, right? The main reason why there's not more buyers out there buying is because, again, from an affordability perspective, it's a little bit more difficult to qualify at 7 or 7.5% than it will be at 5%, right? Yeah. So, we keep hearing, or at least I keep hearing, and I know y'all do too, about the housing bubble and home prices are going to fall and all this stuff. That may be accurate if there wasn't such a disparity between supply and demand, right? Taking this back to simple economics, right, is from an inflation perspective, inflation got to the highs that it did because there were too many dollars chasing too few goods, right? And essentially with housing, that's where, that's kind of where we saw it as well, is there was just simply not enough inventory. And the fact of the matter is there still isn't, right? If we look, people want to compare what we're going through right now to 2006, 7, and 8 and 9, right?
Yep.
And it couldn't be further from the reality, because back then, and we've talked about this before, there was right around 4 million homes being built, right? Well, look at 2022. It's sitting at around a million, right?
Yeah.
Mhm.
So inventory, there's not 4 million homes being built now, right? Where there's more homes than there are people to purchase. It's the absolute opposite, where there's more people looking to buy than there actually are homes to purchase.
Well, the other thing that you're not even, that doesn't even take into consideration, this is just straight up inventory. But one of the things that we weren't dealing with back in 2006, 7, 8 was the iBuyer experience, right? All these iBuyer companies, big, huge firms, are buying up all this inventory and renting out all these homes.
Right.
Mhm.
Right. So they're not selling. So that's why inventory is so low.
Yes. No, for sure. And that's, again, right now there's, if you're out looking for a home, I mean, you have options, right?
Mhm.
I feel like when interest rates get back into the 5% range, those options are going to be gone. Because again, more people are able to qualify, and the need hasn't changed,
Mhm.
right?
Yeah.
In the last 3, 4, 5, 6 months, the need for housing has not changed. Just it got a little bit more expensive, and it got crazy with the offers, right?
Yeah, and that's what I'm a little nervous about, in all honesty, is I love where we're at. I wish interest rates were a little bit lower, for the simple fact that for affordability, like you mentioned, for our clients, but from a professional being able to get the best deal for our clients long term, and to be able to do our job at the level that we're used to doing it, and negotiating and being able to do that sort of thing. I love it. What I'm afraid of is in the spring, interest rates are going to drop down to those mid 5s, and there's going to be this tsunami of buyers hitting the market. Do you have any take on that?
No, yeah, that's exactly right. Yeah, I feel like, I mean, once we start, man, and it's like right around the corner, right? Once we start to see rates push under 6%.
Yeah.
Now, I mean, again, there's always going to be the slide up, slide downs, right? So interest rates, they'll let's say that the February, March of this next year of 2023, they get down to 5.75, right?
Yeah.
There's still a lot of things going on from a world economic perspective, right? You still have the Russia-Ukraine thing. You still have supply chain stuff that's kind of working itself out, but it's still not completely working itself out, right? So there's still things that are potentially going to impact that.
Mhm.
So yes, I mean, it's one of those things where I'm every time I hear someone say like, oh, I'm just gonna wait, I'm like, hey, that's fine, but I would not feel like an advisor if I don't give you the data of why I would maybe ask that you reconsider.
Yeah.
Right? Because again, that's at the end of our at the end of the day, we all have to do what our clients want to do, and that's 100% in agreement with that. But we also have to provide the facts and the data that will maybe shed some light on the decision, because I feel like a lot of decisions that people make are based on the 9 o'clock and 10 o'clock news, which
Yeah.
Yep.
which is that. So I wanted to share one more thing.
Oh, okay.
See if y'all can see that next slide. So this is from it's getting cut off a little bit there, but this is from NAR, right? National Association of Realtors. These are their projections for median home prices over the next 20 to 30 years.
They're not going down.
They're just going up, aren't they? Man.
Yeah.
So now is a good time to buy.
Yeah, if we're talking about, hey, should we buy between now? Like, what's the best time over the course of the next 5 years to buy?
Mm-hmm.
Right now.
Right now. Yeah,
Mhm.
we're all, obviously we're all in agreement there, but
Yeah.
people talk a lot, especially online.
Yeah.
There's the data. That's the information that we can base it off of. It's not just my opinion or,
Right.
somebody else's opinion. Those are accurate
Mhm.
accurate information.
Awesome. Well, great
Yeah.
stuff, Chris. Like always, very much appreciate your insight into the market. If you guys
And
have,
making us feel better. I feel better now.
well, good.
Yes.
I've got Chris on here, so my life's a little simpler here. But you know, we truly appreciate your insight into the market. As always, everything that you do for our clients. Again, if you have any real estate needs, don't forget to give us a call, text, email, whatever it is you need to do to get a hold of us. We will link Chris's information down below if you like to reach out to Chris for any lending questions as well.
Don't forget to hit that dream home form, and that way we know what you're looking for and can help you out.
Absolutely. Good job. Well, until the next time, I'm Andy.
And I'm Patrice.
Take care.